with our first panelist guest, Alex Edquist, who is the 2024 Fintech South Innovation Challenge winner, founder and CEO of Good Agriculture. Welcome, Alex, to the stage. I love that you bought the tour with you. Like, I love when the fans come from out of town, in Atlanta especially, just take over the arena. It happens all the time. So I'm going to start you off with the question that I'm going to ask everyone just to get us off to an ice-breaking start of it. What is the true state of access in financial services today, and how are you helping to build the future?
All right, so I represent a very niche part of the fintech world. I think there's one other person here who works in agriculture, but agriculture is a fascinating industry because so much depends on were you born into an agriculture family and are you able to inherit land from family. So when we think about access, especially for brown and black folks, agriculture is actually probably the one industry that's even worse than startups in terms of diversity. So 96% of farmers are white. And so, the government has tried over the years to figure how do we provide more access through programs like FSA to give beginning farmers low interest rates to purchase land and get started. But historically, the same government agencies have also discriminated against black and brown farmers. So the whole industry is just kind of a mess. What Good Agriculture does is we seek to help farmers with their back offices so that they can focus on the farming. And where we get into financial access is a couple of different things. So one, our first product is actually a tool that helps farmers find and apply to all of the different funding opportunities that are out there for farmers. So there's actually $15 billion a year worth of grants, carbon credits, government cost share programs, and that's excluding all the low interest loans and other things that are out there. But so we have just to give you guys an idea, we have 700 programs in our database of opportunities for farmers, and so we help them kind of figure out what's a fit for them. The second thing we do is we help farmers manage their finances. So we do their bookkeeping, financial analysis, cash projections, all that kind of stuff for them so that when they do go to a bank, they've got their financial statements, they look all buttoned up, and they're ready to get funding. Yeah.
Also, if y'all notice the beautiful green that we're wearing today, not in just the t-shirt, but the thing, I have some sneakers that would match that jacket perfectly. So I'm sorry, I'm just ooh, if I had them on right now. But thank you very much, Alex. If you would kindly take your second seat, and we will bring out our next guest. Coming to the stage next, we have Brian Daly, co-founder and CEO of Groundfloor. Please come on out. How you doing, Brian? All right. You get the exact same question as we asked Alex, and that question is again, what is the true state of access in financial services today, and how are you helping to build the future?
The true state, I think, is alive and well, at least when it comes to investing. We started Groundfloor almost 12 years ago now. We funded our first project in Southwest Atlanta, a neighborhood that was being revitalized as the Beltline was coming into that area. We're proud to finance local real estate investors. And in a world where we hear about Wall Street buying up houses and making affordability worse, Groundfloor started as an investment product to give people access to alternative investments. What we discovered over time is that by forming capital that way, we could finance real estate investors who have businesses in revitalizing important neighborhoods, importantly, as a local resident many times. So Groundfloor today has done almost $2 billion worth of home building and home renovation all over the country. Atlanta's our home. This is where we financed our first several hundred houses, and we continue to finance about 100 houses a month all over the country. What makes us different from any other capital provider in that market, and I think what has the biggest impact on the world, is that we have formatted the product in a way that allows individual investors to participate in this category on the same terms that you could if you were an ultra-wealthy investor or a hedge fund and a private equity investor. And trust me, those investors are coming into this category in a big way. And so it's important that retail investors show up en masse to make our voices heard and make sure that our communities are built the way that we want them to be built. Our investors have been richly rewarded, by the way, over time. Groundfloor has delivered average annual returns ranging between 9 and 10% every year, even during the pandemic, even when interest rates went up. And so in a place where investors are frequently burned by trying something new, Groundfloor has been a mainstay. So I think financing houses and allowing individual investors to have access to that category with as little as $100 investment to get started has made a pretty big difference in the world already, and the best is yet to come.
Thank you very much, Brian. Again, folks not familiar with Southwest Atlanta, try to stop by Cascade Skating Center while you're here. One of the best times you can possibly have, and that is right past I-20 before you get to 7585. Once you get there, you can say you've made it. Stop by my house. I live in East Point. It's not technically Southwest Atlanta, but Southwest Quadrant. Anyway, come hang with us. Thank you so much, Brian. We will bring next to the stage, and yes, you can clap for everybody after they're done. We accept applause here. Yes, yes. Good conversation we're having. Next, we're going to have Rico McCambry, founder, president, and CEO, Novae. Give him a warm welcome to the stage, folks. We'll shake it up again. All right, Rico. All right. By now, you've had a chance to cheat, so I wouldn't skip the question, but I'll be fair. What is the true state of access in financial services today, and how are you helping to build the future?
The true state of financial access. What a time to be alive. How many of y'all feeling good this afternoon? Wave your hand if you're feeling good. Come on. All right, all right. So like you said, my name is Rico McCambry. I'm the founder, president, and CEO of Novae, the credit and money company. Novae actually means new beginnings. And when we started Novae back in 2014, we started Novae to create greater access to credit capital and entrepreneurship for underserved communities nationwide. We actually partner with other fintech companies that offer solutions for consumers and or businesses on a nationwide basis, with our core competency being direct sales. So we have thousands of independent salespeople all across the country that promote our products and services. For our platform, you're probably familiar with like Primerica or Aflac. They have thousands of insurance agents. eXp Realty or Keller Williams, they have thousands of real estate agents. But we have thousands of financial consultants all across the country that leverage our platform and actually build a business by offering these fintech solutions. So we're really excited about helping communities close the wealth gap by closing the ownership gap. And we intend to inspire people to get more out of life, educate them on ways to go about it, and provide opportunities to make it happen. And I'm glad to report the last 5 consecutive years, we've been named the Inc. magazine's list of fastest growing companies in America, with this year reaching the top 100 fastest growing companies in the state of Georgia. So I'm happy to be here this afternoon to share with you guys.
Round of applause. You can hold on to that. I think you're going to pass that around. Also, a round of applause for those shoes. Yes, sir.
Appreciate
the
it,
raspberry out here. I like that. I like that. We're getting into fall, folks. Start to plan your wardrobes accordingly. Next up, we will have Rodney Williams, co-founder and chairman, Solo Funds. Rodney Williams, come onto the stage. Welcome them, folks. I was starting to get long out here, so I'm like, I forgot we have 5 folks. But the question for you again, Rodney, is what is the true state of access in financial services today, and how are you helping to build the future?
Great. Well, hello, everyone. I'm Rodney Williams, co-founder and president at Solo Funds. Well, I think technology has provided a ton of access in communities where it was difficult to do many things from a financial service perspective. Our approach, Solo Funds, started when my co-founder and I had a shared experience of our friends and family needing access to short-term loans, but also when we did have savings, we didn't have great ways to grow it. And to us, that's community finance. You gotta create a way to get a loan when you need it, and then when you do have capital savings, you need a way for that capital to grow and outpace the market. And for us, that's what we built. So individual members make a request, they select how much they need, when they're gonna pay it back. It goes to an open marketplace, we score it, we manage all of the transactions, and you as a regular person can decide who to lend to. You make tips. Those tips equate to well over 20% APY, and as a borrower, you're gaining access to capital about 1/3 of the cost of a credit card. We've crossed over $1 billion in transaction volume, and quietly, despite a ton of scrutiny, I think are fighting a good fight. So it's a pleasure to be here.
Thank you for being here. All right. We've got Rodney, and that leaves us Sabrina Lamb, worldofmoney.org, and founder and CEO, am I saying this correct, Wekeza? Yes, give her a round of applause, Sabrina. You don't have to applaud for me. I need to get the names right. Not a big deal. But Sabrina, the question fairly asked of all of our attendees here on the couch is, what is the true state of access in financial services today? And how are you helping to build the future?
Good afternoon once again.
Good afternoon.
Thank you.
Yeah.
So as introduced, I am Sabrina Lamb, the founder and CEO of Wekeza, which means save and invest in Swahili. Every person, no matter who you are, where you live, your culture, dreams of having independence, of being a participant in this global economic system, but often are excluded because of language, of confidence, one's self-worth. And so Wekeza provides multilingual financial education and global access to investing in US stocks and ETFs specifically focused on pre-K to seniors in the African diaspora. We serve those communities here in the United States and 7 African countries and soon the Caribbean. If you look around in your communities, whether that's Atlanta or in the Midwest and in Minneapolis, many communities live in economic darkness. They're not invited, they're not spoken with, their cultures, their language is not respected, actually. And so that's why Wekeza provides the multilingual financial education in Zulu, in Swahili, in Hausa, in Yoruba, in Twi, so that a person who we're teaching and providing all these opportunities feels seen and heard. So Wekeza, in closing, provides one of the most powerful economic drivers on the planet, and that's called options and access, so that we can fulfill our human dream, and that is to thrive and to prosper. Thank you.
Thank you very much. You can hold on to that microphone. I've got one up here. Okay, so what I already love about this panel, and thank you all for giving us a brief introduction to who you are, and again, how your answers to that question align with your personality, with your goals, with the focus that you have. But I love that we have everything from agriculture to education, and we have this whole gamut of everything running on this stage in front of us. So thank you all for sharing that. My first question for the group, and like I said, for the first question, if we go straight down, that's fine, but this is an open forum. I think if anyone has a question or an answer that's popping out to you, we're all friends here, and if not, you know, I've got $15 to buy everybody some cheap beer afterwards, and we'll be friends at some point. But financial services companies, platforms, they exist in many different formats, as we know, but what makes a great one? You know, we've seen great success stories, we've seen high valuations, but we also know that some of the greater ones are ones that are maybe not that we see in Inc. magazine or in some of the more higher profile media companies, CNBC, but we know they're out there. What makes a great financial services technology company or platform, and what does it take to build, sustain, and grow it?
I would just say that the great ones build with the members, the human beings that they serve, as to building from their own perspective and understanding, building with, not for, and not to.
Yeah, I'd like to add to that. In our space, you know, in 2012, the Obama administration signed the Jobs Act, which many of you may have heard of. And there was a big rush of venture capital into our space. Almost all of those venture capital funded, Silicon Valley, New York venture capital funded startups have flamed out. And the reason is they weren't aligned and they weren't building with. Uncommonly, Groundfloor took this path of going through a regulatory process with the SEC that unfortunately for all of us who were eagerly anticipating qualification Ultimately, it took about 4 years and $2 million, which we patiently raised from friends and family. But when it came time to scale the company, we financed the company with our investor base. Our investors have invested almost $35 million cumulatively in the equity of the company. They're owners. They own 30% of the company. And so I think one of the things we can do to build with is pay attention to how we finance these companies and what the incentives are when you create them, and create incentives that allow us to do the real regulatory work, because in financial services, regulation is always going to be important. Regulation can hold people back, but it also can enable. And I think in our case, it's made our product better. So I'm grateful that we carved that path. That, of course, I was envious as an entrepreneur of all these millions of dollars that were going to our competitors. But I think in the end, it's created a more sustainable, flexible, anti-fragile platform for us. And I think that's why we're still here 12 years later with almost $2 billion of investment volume on the platform.
Great answers. You know, for me, I believe anything great, especially when it comes to business, comes down to leadership. You know, we talk about building something, sustaining something, growing something. It comes down to leadership, and I believe that it's very important as we become more and more successful in the industry that we recognize the responsibility that we all have. You know, I was raised with the notion that we're all blessed to be a blessing to somebody else. Anybody ever heard that before? Nobody? Okay, just a few people, right? You know, well, today you learned something, okay? You know, but at any rate, I believe that the most effective founders are the ones that actually have once lived the problem that they're trying to now solve. For example, I grew up in a few different government housing projects, probably less than 30 minutes away from where we're sitting right now. Now, my lifestyle looks totally different today, but growing up, life was kind of tough. I lived in a single-parent home. My mom worked 2 and 3 jobs, you know, just to make ends meet, and sometimes ends didn't meet. You know, I can remember a few times where a car broke down and she had to walk me to school and then had to walk to work, and then after school come back and get me, and then she would walk me to the babysitter, and then she would walk back to work, and she would do that 5 or 6 days a week for years. And she was blessed enough to get to a point to get access to financial services and some information, and we were able to leave the projects and go to an apartment and then go to a townhome, and eventually got to home ownership. She realized home ownership by the time I had ended up in middle school. And I realized what hard work it gets you, but over the course of time, as I continued to get older, I realized that it takes a lot more of hard work to become successful. You know, my mom continued to work hard, but she lived paycheck to paycheck. God bless her soul. And what I realized is it's gonna take more than just access to financial services to help people build a legacy. You know, I believe that we have to be more intentional as founders and more intentional as executives to not just provide financial services and solutions, but also provide a path forward. If my mother was given access to financial literacy, if she was given access to different opportunities, she probably could have become a millionaire. So it's important for us to realize, how do we bake in a path forward in our products and services, in the technology that we're incorporating? And you're seeing many companies, even like Capital One and Experian, who are implementing courses, you know, and providing opportunities for their customers to make sure that they have a path forward to create some type of legacy for themselves.
I think what makes that fintech great is the ability to grow. And for me to grow, we do as a community, we do a great job identifying problems. We do an okay job at creating the ideal solution for that problem. We usually create a flavor of something else that we've seen before, versus completely rethink the way it should be. An example could be a way you should get a loan, right? If loans are bad, then the entire way should be rethought. A new loan is not the solution, right? That's the way we thought and how we approached building our product. And conceptually, my background is I grew up in CPG. I'm actually a former Procter & Gamble brand manager, and I sold diapers to moms at 25 years old. I still don't have kids, and I was really good at it because I didn't talk to her or, you know, to her. I spoke with her, but more importantly, I was really focused on what does she need. And I understand we make diapers, but can you talk to me about what does she need during this moment in time? And then we can talk to her the right way. But I approach financial services the right way. And I think what ultimately results in that is that if you build something that's needed, that's product market fit. If you build something that's needed, it grows. People use it. You know, as a company, we built this very, very interesting model that removed this concept of even the credit score and FICO. Like, it's not used in our underwriting. We only use cash flow. We let the user decide how much they want versus the institution, because we realized I can go for a $1,000 loan, and the institution is going to tell me that I can get a $5,000 loan, and then I may not know what to do with it. So let's flip it. We also are going to let the user tell us what they can pay. It's kind of inappropriate to tell them what they can pay. And an example would be, how much is a mom willing to pay when she's on the side of the road and she needs a tire fixed and she can't get a loan? It's actually inappropriate for you to tell her what she's willing to pay, because the cost of what she is going to pay is completely detrimental to her and her child and all of the stories that she has to go through. So we kind of flipped that completely upside down, and that was our marketing strategy. When we went out into market, we said people help people, borrow on your own terms, and it grew. I think on the same thing on the lender side. But I think for us, that's been our approach. We've grown to over 2 million users. We 20,000 downloads a day, and we don't spend money on marketing. We don't have a celebrity endorser, and we sure enough have enough negative press about people who don't understand what we do. But it's because we actually built something that they need, and then they have decided they want it. So they use it. That's it.
So I think it's been like a whole 10 minutes since anyone said the word AI. And I love what you all have said about kind of the demand side of this, like what do people want? How do you know what they want? But I think what AI is doing that's really cool is creating new possibilities on the supply side of like, what can we actually do for people? And what I've seen that's really cool is unlocking all these do it for me as a service types of companies that are replacing just software as a service. And so we're really excited about that. And you know, it was funny what you said about like how you design great platforms. Well, to be honest with you, like at least half of our farmers each month like don't log on to our platform. I think they see the notification from us that like, hey, we did your books, they're closed, here, click this link to see your reports. And then they're like, cool, that's done. I'm gonna go back outside. And for us, that's almost a metric of success, because it's like, we're giving them what they need, which is not, you know, fancy financial reports, but it's just like, take this off my plate.
Well, great. I'm glad you brought up AI, because what I wanted to do was sort of move us into something that was brought up a moment ago by you, Brian, is the regulation piece of this. I know a lot of folks here are probably interested in that part. There's a broad range of conversation that we can have about this, but the regulation is part of the reality, and AI is clearly one of those things where we're still figuring out what is to be or not to be regulated, and, you know, are the machines going to Terminator to us? But while we're figuring out how to work with them and vice versa, that is one of the areas in which regulation is still happening. What is the regulation currently getting right, and where is change still necessary from your vantage points? And whoever would like to take that first.
So we deal with a lot of not AI regulation, but just government regulation in farming, because USDA is such a core part of everything that happens. And I think one thing that AI could be really helpful is just helping normal folks navigate all the regulations. So as an example, in agriculture, so USDA administers all these loan programs to help new farmers get started, but it's very much run county by county, and depending on which county you're in and which agent you get, you could have the world's best experience and get exactly what you need, or you could, you know, have no prayer. So just as an example, we had a farmer come to us and say like, hey, we're looking into this program, but my agent told me I can't apply to it because I'm biracial and it's only for black farmers. And like that statement was so many levels wrong. She was definitely eligible for the program, but like one thing that our software helps farmers with is like almost helping them fact check of like, here actually is what's eligible in your state and like in your county. And if you're getting this answer from someone, they may actually just be misunderstanding the regulation. Like you should go get a second opinion, basically. So I don't know about AI regulation, but hopefully it can help people navigate other types of regulation.
Just regulating the truth and just factual information would be good. Okay. Rodney, you picking up?
So I think number one, I think regulation is needed for many reasons, but I don't think it is working well. And I always say that if you look at the biggest financial companies in the world, they are still the biggest culprits of issues, right? I don't think we've had a year where Wells Fargo is not paying a fine, okay? So is it working? I don't know. It doesn't feel like it. I'm just being honest. But what gets the headlines is the regulation towards fintechs. And when you think about market share or impact, right? I have more people at home that have a Wells Fargo account that took advantage of them than whatever came out of Silicon Valley. So to me, it's misguided, it's misdirected, and that means it's smoke and mirrors about what it really is about. And I think my company in particular, we got caught up in that smoke and mirrors, and it was a specific and directive against fintech, which I think if you built a fintech company in the past 4 years, you face scrutiny, whether you were successful or not, right? And that's not how innovation is supposed to be handled or managed. Innovation needs a pathway. That means regulation needs to understand how to give innovation a pathway. Pathways could be accelerators. Pathways can be think tanks, sandboxes, you name it. Other countries around the world do this very, very well. It's like fintech licenses in other countries. But the United States doesn't want to talk about it. They want to actually hurt it or stop it or control it. And I think that's not a pathway for innovation in the way that I see it.
Regulation, it sounds like a wonderful, wonderful term or exercise because we all want to make sure that everything is managed properly and there are no bad actors out there. I think from how I walk through this thing called, fintech and my company, Wekeza, I feel it would have been detrimental to the people that we serve by just providing an opportunity for them to invest fractional and whole shares in U.S. stocks and ETFs without any education, for them teaching them what questions they should ask themselves to determine their own risk, et cetera, to give them the education so that they can empower themselves to make their own financial decisions. And so, but I'm feeling the regulators, and I'm making a huge generalization, are unleashing problematic financial services, and they're specifically targeting communities that it's been, the statistics show they have low threshold of financial education. It's the big shiny thing, and it's almost cloaked in a get rich quick. And, walking through this, it's my determination to make sure that our members know exactly how to apply the service that we have to themselves, as opposed to, just use it, don't worry about it, it's gonna be okay. And every day there's a new financial product on the market, and that's wonderful. But the most financially vulnerable people who may be attracted to it, and it may or may not be wonderful for them, that's where regulators are often not stepping up and serving. And if they're politically aligned, then that's a whole nother discussion. If they're bad actors, but they have the political capital to continuing to harm people.
I mean, look, in our space, the prevailing legislation goes back to 1933. In the wake of the Great Depression, it's the 1933 Securities Act. And this effort in 2012 to modernize that was heralded as a job creation possibility, a way to help companies access public markets, and a way to help individual investors, more of us, tap into private markets. And I think one of the things I learned from my co-founder when we were starting this process is there's the statute, and I went to law school, so I knew this at some level. There's the statute, the law that gets passed. There's the regulation, which are the rules for how the statute is going to be implemented. And then there are the human beings at the SEC or at FINRA or at whatever your regulator is who are going to implement those rules. And all three levels matter, and how we as companies navigate those three levels matter. We chose to navigate in a way that made the product better, and that we felt like, look, if you're gonna open up alternative investments to everyone, some people, if it's done the wrong way, will get hurt. They will participate in get-rich schemes. There will be pump and dump opportunities that these laws were passed last century to prevent. And so we have a responsibility as a platform, the regulators have a responsibility, the people who write the rules have a responsibility to make sure that we get the benefit of the rulemaking, which is trying to modernize. I mean, the truth is, most wealth in markets today is created in private markets. And so opening it up to everyone in a format that's fair and beneficial, like the way these things are engineered really matters. Most wealth is created there. We can't protect people from wealth creation. That's not a good idea. And so there's a trade to be made in how we use these rules in an intentional way to get people the benefit while still, as private actors, making sure that we protect the consumer. Because I'll tell you what, if we don't build good product, if we don't build good offerings, the regulators, the pendulum is gonna swing back. There will be a new administration. Elizabeth Warren will have her day. She will shut it down, right? And she's doing it because she's beholden to the banks, by the way. That's the thing she won't tell you. But right now she doesn't have as much sway. I think it's important for us as entrepreneurs, as founders, to be mindful of that. I think all of us, people like us on this panel will be, but there are always people who have misaligned incentives who won't. And that's the danger. I was just saying, those of us on the panel, we have aligned incentives, but there will always be actors who don't. And those actors can ruin it for everyone. Because the benefit of deregulation should open up opportunity, but it also just brings risk. And I think that's the tension we live in.
Yeah, and I would just also add, I just feel that, just occurred to me, the so-called bad actors, and they get the fine, I think, and they get fined over and over again, I think that's part of their bottom line. They're not clutching their pearls somewhere, oh my gosh, I got fined and I feel bad and we're gonna change our practices. That's part of we're gonna get fined, but we're gonna still push this toxic product out, which belies the title of our panel, Democratizing Access.
It's what Nike did with Michael Jordan, but I digress. I didn't mean to make this about me. So anyway, well, with the limited time that we have left, we've talked about a lot here. We've gone over some regulations and you all's feelings and concerns and thoughts on it. We've talked about building, but I know there are some people in this audience who are either already founders and builders of platforms and startups and the next wave of fintech service providers. I wanted to ask you all if you could give them something, whether that's a nugget of wisdom or truth, or whether that is a resource or something they should experience. Do you have anything that you can give our audience, each of you, within, let's call it 30 to 45 seconds?
So the thing I would say is create a way to stay in touch with all the people you meet and try to meet as many people as possible. So we actually just closed our seed round yesterday, and it was through our mentor from the Fintech Innovation Challenge last year who introduced us to someone who introduced us to someone. And trying to work in this space, everything is such low probability, you gotta maximize your shots on goal.
I think, one of the things that I try to help entrepreneurs who are just getting started, as I was at one time, to realize is that nobody cares about your idea as much as you do. And that sounds kind of discouraging, right? You have something that you want to create in the world, and it's easy for, I can't tell you how many bankers, well-meaning bankers, put their arm around me in the early days and said, Brian, you seem like a nice guy. You don't really want to do this business. And it's important to listen, but the corollary to the rule is that nobody cares about your idea is that when somebody shows up who does, that's especially important to pay attention and keep in touch and leverage off of that and let it feed you. Because there will be those people who pop up who have a perspective on your idea that you didn't think of, a connection for you that you wouldn't have made. And it's made all the difference for us. It's been very humbling for me over time to see that. But just remember, nobody cares about your idea like you do, but that's okay. There are some people who are going to, and those are the people who make the difference.
I would say, just make sure you take time to get very clear on what you're doing and who you're serving, right? And establishing a purpose, because purpose will get you up in the morning when, the bank account won't, right? When the partners you started with quit on you, or the people that said they were going to support you don't support you anymore. It's incredibly important for you to be able to identify exactly what you're doing, who you're serving, and why you're doing it. And over the course of time, as you continue to pour everything into your endeavor, people will start showing up. We didn't raise any money when we started this company almost 11 years ago. We tried. We couldn't get any funding. And today, we get too many phone calls with investors trying to figure out how can they work with us. But we kept the faith, and we understand and are crystal clear the reason why we wake up in the morning and what our part is to do in this marketplace. And if you could find your trajectory on that route, never quit, have the faith, and surround yourself with some smart people. It'll happen for you too.
I've been an entrepreneur in a couple of different industries. I had a beauty company and I sold it, and then my first fintech turned into a fintech. It was actually launched first in entertainment. So I feel like I have this perspective of different industries. And what I'm ultimately going to say is fintech is by far the hardest. And it's the hardest because of the level of commitment that it takes. And what I'm ultimately referring to is that it's highly regulated. It's complicated on a state-by-state level, depending on what you're up to. And no one cares until you're big, right? I have an email that we emailed the CFPB when we were in Techstars Accelerator, asking them a question. It's a hilarious response. I should show it to everybody one day, but something about attorney privilege, they won't let me show it to anyone. But my point is that you got to navigate so many things, and whether your bank account looks great, or there's an inquiry from a state regulator, or your new compliance leader is upset. There's just so much on a day-by-day basis, and it just takes a lot of commitment.
Techstars Tulsa.
Techstars Kansas City.
Tulsa. So you don't need anyone's permission or approval to build what you're building. Almost every initiative that I have created, no one understood what the heck I was talking about until it launched. Be careful on sharing your dreams, because are you doing it to get that approval? That, oh, well, John from so-and-so, and so he thought that was a good idea. You gotta move anyway. You gotta do it anyway. And I really encourage everyone to stop repeating the toxic words about our community, our fintech community, or raising money, or the statistics. Silence all that noise and do it anyway. And never seek approval outside of your own determination. Do it anyway, and stop repeating or addressing, well, the statistics say, so what? Are you gonna do it, or you're not gonna do it? Do it.
Everyone give Sabrina Lamb, Rodney Williams, Rico McCambry, Brian Daly, and Alex Edquist a round of applause. It's been my pleasure to host this conversation.